Early on Thursday, the markets didn't seem to be moving quickly ahead of additional jobs data, which is predicted to show sustained growth in the American labor market. Before the opening bell, futures for the S&P 500 and the Dow Jones Industrials fluctuated between little gains and losses. The weekly unemployment data for the United States will be released on Thursday, and the eagerly anticipated December jobs report will be released on Friday. Strong employment figures are interpreted as a sign of inflationary pressures that would support future Federal Reserve interest rate increases. The Fed increased its benchmark short-term interest rate last month for the seventh time in 2022 and hinted at further increases in an effort to chill the economy and impede job growth. The increase was lower than those from the previous 4 sessions, which is evidence that, despite still being high, inflation has been slowing. The Fed's mid-December meeting minutes, which were published on Wednesday, show that officials were still adamant about maintaining high rates, finding little solace in the fact that inflation had fallen from a peak of 9.1% in June to 7.1% in November. Even while the U.S. job market is still strong, there have been an increasing number of layoffs in the technology industry, which is struggling with declining demand as rising prices put pressure on both businesses and residences. Amazon said on Wednesday that it would be laying off 18,000 employees, while Salesforce, the owner of Slack, indicated it would be eliminating about 8,000 positions. Twitter, DoorDash, Twitter's parent company Meta, and other companies have all announced layoffs recently. The FTSE 100 in Britain increased by 0.6%, the CAC 40 in France increased by 0.1%, and the DAX in Germany remained constant. Concerns about China's economic slowdown were negatively affecting the mood throughout Asia. The Sensex in India fell 1%. A long-term downturn in China's real estate market and the effects of pandemic limitations that were only recently eased as the virus spread in the country's biggest statewide epidemic so far have both been made worse by the country's widespread COVID-19 infections. Robert Carnell, regional head of research for Asia-Pacific at ING, stated that retail sales in general should be worse in December compared to the preceding month. Later in the month, he predicted that demand may increase again over the Lunar New Year. There may be an increase in daily COVID cases following the lengthy holiday, followed by another slow month for shopping. For retailers, the road to recovery could not be easy, he said. The BOJ won't be able to keep rates below zero while rates are skyrocketing elsewhere, despite its warning that a rate hike is not likely. The BOJ will raise rates sooner or later, and that will be reason enough for traders to invest heavily in the yen, which had the worst performance among the major currencies last year, according to Swissquote Bank senior analyst Ipek Oskardeskia. The American dollar increased little in currency trading from 132.56 Japanese yen to 132.69 yen. A euro was worth $1.0608. On the New York Mercantile Exchange, benchmark U.S. crude increased $1.42 to reach $74.26 per barrel in electronic trading. On Wednesday, it fell $4.09 in price. The benchmark for international prices, Brent crude, increased $1.55 to $79.39 a barrel.